What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about the craziness, the insanity that we saw today in the markets. And first of all, happy International Women's Day for all the women out there. Shout out to you and keep on doing the good stuff you do. So, what happened today in the markets? Today we had yet again another red day in the markets, except for the Russell 2000, my favorite market leading indicator, which went up 0.60%. Nasdaq went down 0.28%. Dow Jones went down 0.56%, and the S&P 500 went down 0.72%. Oil went up once again today 4.43%. Gold goes up 3.12%, and silver is killing it, guys, and it went up today 4.51%. Something that is worth pointing out before starting out this video, guys, and mostly for the beginners in this business out there. Guys, we are having, as of now, the second worst start of the year ever for the market since 1900. Today we actually had a crazy volatile trading session. So many of you guys ask me questions like, hey Alvaro, is this normal? Until when are the markets going to be behaving in this crazy manner? And guys, you need to realize, you need to understand that the situation that is going on as of now in the market is absolutely extraordinary. And this crazy volatility and these crazy trading sessions that we saw today the S&P 500 and the Nasdaq 100 had an unbelievable crazy trading sessions with wild swings up and down. This situation is going to go away eventually. We cannot set a date for things to settle down, but it is going to happen eventually. The markets are trying as of now to price in the situation in Ukraine. They haven't been able to price it in yet, but they will. And remember that from a historical standpoint, once the Federal Reserve starts a new interest rate hike cycle, the markets usually go up. So be patient and don't lose your mind with these crazy markets. Okay, some important information that is worth pointing out about what happened today in the markets. Today we had President Biden confirming a ban against Russian oil imports. However, the markets didn't get too worried about it because President Biden also highlighted the fact that this ban won't be followed by the US European allies. So this is not really a big concern for the markets because the US isn't importing a lot of oil-related stuff from Russia. Today we also had President Zelensky, the president of Ukraine, affirming that he will no longer insist for Ukraine to be included in the European Union. That's good news, obviously, because that would prevent us from World War III. And he also said, and this is something very positive, that he was willing to negotiate a recognition of the Ukrainian separatist regions, the pro-Russian regions that they have as of now in Russia. So that was good news. Let's see if the Russians are willing to reach a peace deal anytime soon. Keep in mind, guys, and remember that here in the channel, we only post YouTube videos Mondays, Tuesdays, and Thursdays. So tomorrow we won't be posting any stock market update video. Keep in mind that on Thursday, we are going to have the CPI data report that is going to be a market mover. This CPI data report, or this inflation report of February, is going to be the very last economic data that the Federal Reserve is going to get before the next Federal Open Market Committee, which is going to take place on March 16. So if that report happens to come out way worse than expected, maybe the Federal Reserve is going to be prone to hiking interest rates higher than 0.25%. So that is obviously going to be a market mover. When it comes to the sectors of the markets, check this out. Check out this roller coaster, guys. This green line that you guys can see over here is the energy sector. So the energy sector, guys, today, and this goes to show the crazy volatility that we saw today in the markets at noon, 11:59 a.m. Eastern Standard Time, the energy sector was up 4.95%. And then, guys, a few minutes after that, the energy sector at 12:40 p.m. Eastern Standard Time, this sector was the worst performing sector of the markets. It was down 0.89%, and it ended up being the best performing sector today, going up 1.57%. What an insane trading session we saw today. When it comes to the most important sectors of the markets, the tech sector went down today 0.49%, and the financial sector went down today 0.59%. Keep in mind that the 10-year Treasury yield went up today almost 6%, but the financial sector refuses to trade correlated to the 10-year Treasury yield. The worst performing sector today was consumer staple, which went down 2.70%. This was an easy one, guys. We found out today that a bunch of companies that are members of this sector are leaving Russia. Coca-Cola, I think that also McDonald's confirmed today that they are leaving Russia, and that's a reason why consumer staples was the worst performing sector today. When it comes to the advances and declines distribution, we find some sort of balanced day, guys. Today we had 3,909 stocks going up and 3,528 stocks going down. When it comes, guys, to the trades that I took today, I had a very active trading session. Let me show you. So AMD, Advanced Micro Devices. What did I do over here? Let me show you. I bought back a covered call that I sold yesterday. So yesterday I sold the $105 call that expires on April 21st, and I was paid $2,360, and I decided to close this trade today, and I paid $2,200. I ended up making over here $160. And guys, SPXL, the leverage ETF that tracks the S&P 500, I took 3 day trades, successful day trades for that matter, with this leverage ETF. So check this out, guys. And mind you, and I am about to go over the S&P 500, I was able to take the following 3 trades that I am about to show you in a successful way because I was absolutely convinced, and this is something that I told you guys in yesterday's video, that the S&P 500 was very likely to find support at 4,160 points. I'm not going to say that I was absolutely convinced, but I was confident on the fact that the S&P was going to find support at 4,160 points, and that happened on 3 occasions, and that let me take these 3 day trades in a successful way. So today I purchased 120 shares at $94.50, paying $11,340. I closed this trade being paid $11,485. I made over here $145. Afterwards, later on, I purchased 120 more shares of SPXL at $93.88 and 88 cents, correct, paying $11,265, and I exited this trade and I was paid $11,424. I made over here $180. And the third day trade that I took on SPXL was taken, guys, let me show you over here, with call options. So what happened over here? SPXL. So let me show you. This was the third day trade. So I purchased the $90 call that expires on June 17, and I paid $1,770, and I closed this trade being paid $1,910. I made over here $140. So in summary, I ended up making today $625. I have nothing to complain about today's trading session. The VIX, guys, it went down today 3.62%, and it closed today's trading session at 35 points. If you guys remember yesterday's video, I told you, watch out for the VIX. It has already been rejected at 38 points on 2 occasions. Back in January, when the indices bottomed out and back in February when the indices bottomed out in February. So today the VIX got closer to 38 points and we saw a decent retracement when it comes to the volatility index. So now the big question is, are the bears going to be able to take on 38 points and maybe taking the VIX up to, who knows, 40, 45 points? That's a big question mark that we have as of now on the table. S&P 500. And as I said in the introduction of this video, went down today 0.72% and it closed today's trading session at 4,170 points. Check this out, guys, the insanity that we saw today in the S&P 500. So the S&P 500 went up as soon as the trading session opened. It found a resistance at 4,216 points, and right after that we saw a pullback of 1.42%. And after having found support at 4,160 points, we saw a rally of almost 3%, an intraday rally of almost 3% to the upside after having seen a drop of 1.40%. Absolutely unbelievable. The volatility that we are seeing as of now in the market is something absolutely remarkable. And in the case of the the 3-day trades that I just showed you on SPXL, they were taken over here, guys. 1, 2, and 3. That's it. 3 successful day trades that I was able to take in a successful way, because I was plenty aware of the fact that the S&P 500 was very likely to find support at 4,160 points. So, and as I just said, the S&P closes slightly above 4,160 points. This is a critical spot from a technical standpoint, guys. Remember that we are talking about a former area of support back from mid-June. So this is obviously going to be the very first line of defense for the bulls. However, if the bears are able to take on 4,160 points to the downside, if they can break this support to the downside, then the next important spot in which I am going to be expecting some support for the bulls is going to be 4,140 points, 14 points. That happens to be the lowest point that the S&P 500 has seen since this corrective process began. This was back on February 24th. When it comes to resistance, when it comes to the most immediate task that the bulls need to carry out tomorrow, that would be taking on 4,260 points, the area of resistance in which the bulls were rejected today. Now let's go ahead and take a look at the Nasdaq 100. And as I said in the introduction of this video, the Nasdaq 100 went down today 0.39% and it closed today's trading session at 13,267 points. And guys, obviously, this technical chart doesn't look good at all. And I think that the last line of defense for the bulls over here is going to be 13,065 points. However, the $1 million question is, and since the Nasdaq 100 isn't looking any good, what happens? What's the next key level for the bulls if 13,065 points happens to be taken out by the bears? I'm glad you asked. Let me pull up here the 3-year chart. And in that case, guys, I think that the Nasdaq 100 could be heading down to 12,650 points. We are talking about a former area of support back from mid-March. And we are also talking about a former area of resistance back from November of 2020. So are the bears going to be able to fill this gap down to 12,650 points? That could be the case. This would be unbelievable, guys. Take into account that the NDX was trading at almost 17,000 points 2 months ago. So this would imply a correction on the Nasdaq 100 of almost 25%. Wow, believe it or not. And when it comes to the most immediate task that the bulls of the NDX need to carry out, that would be taking on 13,720 points. That's the lowest point, the low point of last January. So what is going to happen first, guys? The bulls taking on 13,720 points, or the bears taking on 13,065 points? We will find that out in the upcoming days. The first stock of this video is going to be Bank of America, which went up today 0.65%, and it closed today's trading session at $38.59. Guys, as of now, the stock of this bank is 23% of the highs in a bear market. And I'm thinking, and I believe, I could be mistaken, I have been mistaken before, that this bank is going to be a beneficiary of the new cycle of interest rate hikes. So if Bank of America, if the stock of this bank happens to be able to consolidate slightly above $38, which is a very key level in technical terms, because we are talking about a former area of support back from July and August of last year, I am going to be willing to pick up some shares of this bank, guys, because I think that if this support of $38 happens to be respected, there is room up to $43 for that matter, $42.70. $43 happens to be a previous area of support back from mid-January, also back from mid-December, and lastly, back from mid-October of last year. And mind you, these three previous areas of support happen to coincide with the 50 SMA on the 4-hour share. So this would be a very reasonable price target in order to close this trade. So if we are able to pick up some shares at $38 or $39-ish, and if we happen to write them up to $43, we are looking at a 10% profit. And the second stock of this video is going to be one of the victims of one of the, let's say, ugliest victims of the corrective process that is going on as of now in the market. Shopify goes down today 8.18%, and it closed today's trading session at $514.95. So guys, what else can I say in technical terms of Shopify? This chart is broken. This is a technical downtrend. This chart looks extremely horrible. The only positive aspect, so to speak, would be the RSI of Shopify, which is very low. It is at 22 points. The stock of this company is severely oversold, so we might see some sort of relief rally anytime soon. But it is very difficult to determine any predictable level of support over here because this chart is absolutely broken. So when it comes to taking a short-term trade, that is not something that I am willing, that is not what I am thinking about over here. Let's just put it that way, guys. However, when it comes to the long term, that's a whole different story, guys. I think that if Shopify keeps on dropping, the next foreseeable area of support is going to be $418, guys. We are talking about a former area of support back from mid-April of 2020. And also a previous area of resistance, get these guys, back from August of 2019. So if Shop happens to pay a visit down to this area, somewhere between $420, $430, I am going to be willing to pick up some shares for the long term because I don't pretend to be a hero over here. I don't need to guess the bottom of Shopify. However, near $400, $430, the stock of this company is going to start to look pretty attractive from a long-term perspective because I believe that this company has a bright future ahead of itself. The third stock of this video is going to be Valero Energy, and let's talk about energy stocks that are on fire. Valero went up today 7.77%, and it closed today's trading session at $90.54. So guys, this is a beautiful short, clear uptrend. Valero is trading above the moving averages, and we have a clear resistance at $93. This is a previous area of resistance in which VLO felt back on February 10th. So what could be potentially happening over here if the bulls of VLO are able to take out $93? Take a look at the RSI of Valero Energy. It is at 67 points, still healthy from a technical standpoint. So I'm thinking, guys, that if the bulls can take on $93 on good volume and momentum, which might be the case because most of the energy stocks out there have been on fire, there is room up to $100, a previous area of resistance back from November of 2019. So if we were able to take a momentum trade from $93-ish up to $102, we are looking at a 10% profit. And the last stock of this video is going to be another energy stock that has been on fire, ChargePoint, which goes up today 5.34%, and it closed today's trading session at $16.57. Very decent looking short. We can see over here a golden cross. You guys can see how this 50 SMA crossed above the 180 SMA on the 4-hour short on March 1st. And the bulls of ChargePoint are making a test of a very important previous area of resistance at $17, which is an area of resistance in which the bulls already felt back on January 11th. So I'm thinking, guys, that if the bulls can take on $17, they can fill the next gap up to $20, $19.50 for that matter. $19.50 happens to be a previous area of support back from mid-December and also back from mid-September of last year. And these two previous areas of support also happen to coincide with the 100-day moving average. So if we were able to take a momentum trade over here, mind you, the RSI of ChargePoint is at 64 points. It is a bit elevated, but we have seen ChargePoint trading before with its RSI at 81 points when ChargePoint has trading on good volume and momentum. So from $17 up to $19.50, we are looking at a 14% profit. Nothing to sneeze at, guys, at all. And with ChargePoint, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday. Once again, next Thursday, 3 or 4 hours after the market closes. Peace out.